Yes. What's going on, family? What is up, guys? What is up? What is up? What is up? Shout out to every single one of you guys tuning in tonight, family. Super excited to be here with every single one of y'all. If you guys can hear my voice, if you guys can see my screen, let me know by going ahead and dropping your locations in the chat. You guys know that I love to start these sessions off, these streams off, family, with just seeing where everybody is located, seeing how diverse the community truly is. It's something that I truly get a lot of excitement from. So go ahead and drop those locations, family. Let me know where you're tuning in from. I see we got New York City in the building. We got New Jersey. What is going on? Tony Gold. What's going on, Tony? Shout out to you. You're the first commenter in the stream today. As I like to say, family, I will be actually doing sometime in the future, in the very near future, right? What I actually want to do is literally just an idea that I've been thinking about over the past few days, over the past few streams. Is probably the first 5 people, right? The first commenters, the first people that actually engage with the streams to start off the streams for every single stream that I do, which I do 3 streams, Tuesday, Wednesday, Thursday, and I also do my Sunday streams as well. So out of those 4 streams, the first people, those 4 people that comment first, I will start to do some private sessions with strictly you guys, just to show you guys love for showing up, for being on time, and also being the first person in the chat to actually go ahead and comment. So I feel like that's something that's going to be extremely beneficial for everybody that does take the time to be the first one to comment. So I will actually start keeping track of that so that we can actually start implementing that as well, families. But as usual, welcome to today's session. Super excited to be here. Let's see who else we got. We got Vermont in the house. We got LA in the building. We got Houston in the building. We got New York City. What is up? What is up? ATL, DMV, Florida in the house. Baltimore, Maryland. What is up? We got Oswego, New York in the building. Shout out to you guys out there in New York, upstate New York. I appreciate y'all. I love y'all because I'm from upstate New York as well. Shout out to the 518 Familia. Anybody from the 518, I appreciate y'all. I love you guys. You guys know how we do, right? And I appreciate anybody from upstate New York. I see we got Riverside, California. We got Barbados in the building. We got Baltimore in the house. What is going on? Shout out to you guys out there in Baltimore. Argentina again, my friend Juan Carlos. What is going on? Good to see you in the chat as well, family. Go ahead and start smashing that like button for me. Go ahead and start smashing that like button. Let's definitely go ahead and get those likes up so that we can get the engagement that YouTube wants, so that we can get this content blasted out in more places and to more people. Okay, we got Malaysia in the building. What is going on? Shout out to you guys out there in Malaysia. I believe it's in the morning time over there in Malaysia. All right, it's already literally the next day. It's the 24th, I believe, and it's like morning time. So shout out to you guys out there in Malaysia. I appreciate y'all for tuning in as well. We got the boy Ghost Games in the house. What's going on, Ghost Games? What's going on, my boy Keith? I appreciate you, bro, for checking in as well. Super excited to be here, family, with every single one of you guys as usual. I know I say that a lot, but it's true, right? I actually love doing these streams, and I love coming on here with you guys every single Tuesday, Wednesday, Thursday, because it's my chance to actually go ahead and provide you guys with value, and it's your chance for you to actually come and really just learn something new, or just get a little bit more insight that could bring more clarity into you and your trading. And that's ultimately the ultimate goal. Okay, that is the ultimate goal, is for me to come on here and bring you guys with some clarity, bring you guys with some knowledge, some education, and also look at some possible opportunities that we could take advantage of, you know, to close out this week. Because again, it is Thursday, right? Yeah, it is Thursday already. So tonight is my last stream of the week with y'all. I will be back on Sunday to do our weekly outlook. But like I said before, guys, next week I will not be doing my streams. All right, Tuesday, Wednesday, Thursday streams will be canceled for the week, simply because I am going to be doing my boot camps. It's earlier than 10 o'clock, but I am going to be doing my boot camps all next week. And my focus is going to be with every single one of you guys that are actually going to be in the boot camp. Because, again, the streams technically are probably going to be maybe 2 hours. It could last longer. I'm not sure, depending on how the flow goes. But, yeah, next week, guys, I will not be doing any streams. Okay, I'm just putting that out there. All right, next week, I'm taking off from streams so that I can focus with everybody that's in the boot camp itself. Because we do start the 5-day Pro Trader boot camp starts on Monday. And I'm extremely excited to actually host it for you guys. I pretty much just finished up the last PowerPoint that I had to do, and I'm extremely excited for every single one of you guys that are in the boot camp to actually get the value that I'm about to provide with y'all, right? Because like I said before, guys, like this boot camp is, I mean, I've never done such an in-depth boot camp before. I've done a crap ton of boot camps, right? I've done a shit ton of boot camps over the past 4 years of me teaching. And I can guarantee you that by far this is my most in-depth, my booth camp that I'm most excited about. And it's because of the value that's actually in it, right? I'm literally going to be teaching on things that I've pretty much been able to really get a really good grasp on over the past year and a half to 2 years. And I'm also teaching on things, guys, that I've never even spoken about in any boot camp that I've done in the past. And I'm excited about that because I know that since the stuff that I was teaching on, that I'm about to teach on in the boot camp, I've gotten a correct of aha moments on, right? Like I was able to really take my trading up another level based on the information I'm about to teach. I know that it's also going to help you guys also go up to a whole nother level as well when it comes to trading. And that's what I'm exactly super excited about, guys. Overall, it's not for me. I am excited to teach it, but it's more so just to see your guys' reactions, right? To see how much of an improvement your trading is eventually going to become as well, based on the information that you guys get from the boot camp. Like I mentioned, guys, this boot camp is not just going to be creating profitable traders, but this boot camp is going to be creating the next round of mentors, right? The next round of creators, teachers, influencers, right? Whatever you want to call it. And that's what I'm really excited about, right? Because you know, I truly believe that once you actually learn a skill and you become profitable in a skill, then it's your time to step up and be the mentor, right? Then it's your time to step up and also go ahead and teach other people how to really become successful just like how you are. So that's what I'm excited about, is to go ahead and create not just profitable traders, but even create the next round of mentors, right? The next round of teachers, the next round of educators that are also able to go ahead and inspire other traders to really get to the next level. So that's what I'm excited about for sure, right? So let's see, we got let's get it, boot camp about to be amazing. It's about to be crazy, right? I see we got the DMV in the building as well. Shout out to you, Danielle. What's going on? I appreciate you for tuning in. So let's go ahead and get right into this, guys. Again, there really hasn't been too much happening at all this entire week. It's been a very choppy, very range bound week for the most part. Obviously, like myself, I trade predominantly USD correlated pairs. I think the only pairs that I trade that are not USD correlated or denominated with is GJ, right? Pound yen. And we're going to talk about pound yen, guys, because I had a freaking a very interesting day with pound yen, and that we're going to talk about, right? I started off the day with a couple pound yen losses, but I ended up ending out the day today with some bangers on pound yen that pretty much completely erased all the losses and some, right? So I was able to grow the funded account that I'm actually growing right now. I think I'm around 5% growth. Again, the goal to pass the actual first phase is 8%. So again, GJ really helped me get at least a percent closer than we were yesterday, and we're going to talk about that as well, guys, tonight. But for the most part, we really haven't been seeing much, right? There really hasn't been too much movement whatsoever in the markets. It's been very choppy, very range bound. And we're going to see if there's anything that we can possibly set up going into London session, and then obviously going into New York session in the morning as well. But before we do that, guys, we did have some news that came out earlier today with pound PMI data getting released. And also the one that I was really focused on was these initial jobless claims for the U.S. Again, this data release right here, guys, the initial jobless claims pretty much measures the number of the number of people that filed for unemployment compared to the previous month. Now, obviously, when we're talking about this type of data release, guys, we have to understand the importance of the employment numbers and employment data, because employment is a major driving factor, guys, of overall economic health across the board. And reading this type of data, guys, can really sometimes bring some volatility to the markets. Obviously, with today's release, we seen a little bit of volume come into the markets, but nothing too drastic, nothing too crazy. But I want to talk about these things, right? Because ever since I started doing these streams with you guys here on YouTube, which we've been doing it for easily over a month now, consistently for the most part, I've been really having a major emphasis, guys, on really trying to educate y'all on fundamental and sentimental analysis, because that is truly the driving factor in these markets. Okay, once you figure out fundamental biases or create sentiment from the fundamental biases, that's what typically ends up creating the technical analysis that we love trading. That's why it's important to really not just understand things from a technical perspective, but understand everything that has to correlate with profitable trading. And that involves all the forms of analysis, guys, right? And that's what I've been really trying to beat into you guys' head since I started these streams, was really getting you guys educated on how to trade, not just from technical perspective, but from a everything perspective, okay? So initial jobless claims, guys, again, measures the number of individuals who filed for unemployment insurance for the first time during the past week. They were actually forecasting 227,000 new people that filed for unemployment. It actually came out a little bit higher than expected, but it's still lower than what the previous numbers actually were. Now, again, this is pretty much like mixed data actually getting released, because if we're going to compare this, guys, and how you really look at this, right, and how we trade this data, and I actually talk about this in depth on the actual bootcamp as well, on how to really trade this type of data and how we trade it in terms of the forecast and the previous. But very simple, guys, right? We have a previous number of what actually was, right? We have the forecast, which is the rumor or the prediction of what it can come out as, and then we have the actual number of what it actually is, the facts, right? Now, this is mixed data because this number right here, yeah, is higher than the actual forecasted number, right? Which is technically looked at as bad for the economy, because that means more people are unemployed, more people are actually filed for unemployment benefits, but it's also still lower than the previous one, right? So again, it's like mixed news, okay? Because it's higher than the forecasts, but it's still showing lower numbers than the previous month. And that's why, in my opinion, from an overall macro perspective, that might be looked at as actually something that's positive for the economy. But I will say this, guys, right? And this is very important, right? I will say this. As these next few months come out, I do expect this number to continue to increase, right? Because the way that inflation works, right? And with inflation, guys, we're seeing the Federal Reserve do a lot of things to try to combat inflation. And we talk about this on every single stream. I get it. I might sound like a broken record, but this is very important, especially when we're reading data and releases, because all this stuff changes all the time, right? But with the Fed actually doing all these things to try to control inflation, and one of those tactics being raising interest rates, that's now making everything cost more expensive. That's now making it for businesses as well, their profit margins, because the cost of everything has increased. The profit margins for these businesses, guys, is also starting to decrease. And a way for them to try to combat their profit margins and decreases, they obviously start cutting costs across the board. One of those costs that they actually start to cut is also employment. Okay, so they stop hiring as a whole, which, if you guys noticed, a lot of major corporations, guys, actually have a hiring freeze right now. And after the hiring freeze is going to now go into employment cuts, right? Where people are now going to start getting laid off, start to get fired, because they have to be able to account for some of that profit that is now being lost due to what the Federal Reserve is actually doing to try to combat inflation. So my opinion is that I believe that this number, guys, will actually start to continue to increase, and we should see. And I mean, we can look at the actual numbers right here, or the actual little graph that we have here. Right now it's pretty much been very flat for this entire year. But I do predict, guys, for this to actually start going up higher, right? Like, I would not be surprised, guys, if closer to the end of the year, we do see employment way higher than where it currently is now, or at least unemployment way higher than where it currently is now, right? Because one thing that I want you guys to really understand as well, this is something that I actually wrote down on my actual whiteboard that I have here, is understanding the flow, guys, of how things get affected due to these measures that the Federal Reserve actually, does, right? So the first thing that we see, guys, right, whenever we have drastic decisions that occur by the Federal Reserve with, again, raising of interest rates, going through the process of quantitative tightening, all that good stuff, right, we see it occur through asset prices first, right? Even things like inflation, right? When we see inflation occur, we usually see inflation occur first to asset prices, right? So when I say assets, we're talking about things like the stock market, the equity market, the commodity market. We start to see all those things increase in price tremendously first, right? So when inflation really started to occur, we've seen inflation occur through the asset markets first, which is why we've seen used car sales go through the roof over the past year and a half, which is why we've been seeing the housing market, real estate, literally at the highs, going absolutely insane, right? Which is why we've seen a lot of these assets, guys, that people benefit or people depend on to make money. We've seen those absolutely go drastically through the roof. Now, what comes after asset prices increasing due to inflation is now going to be the cost of goods and services, which is what we also started to see. Right, so we've seen assets go up in price, assets increase in value. Because of the assets increasing in value, we now also seen the price of goods and services also follow Obviously assets increasing in price. And then once we start to see assets and price of goods and services also to increase, then we also finally see then we eventually end up seeing obviously a decline in everything else, right? Wages, which is what we are getting paid, that is usually the last thing to actually increase. And that is the big problem that we have, guys, when it comes to fighting inflation. Because if the price of goods and services is all increasing at a rapid rate, but yet wages is always behind the ball, that's why the Federal Reserve has to act, right? Because when we're thinking about things like inflation, right? Inflation is showing us the growth in our economy. I mean, GDP shows us the growth in our economy, but GDP also drives inflation. Now, you could look at inflation and say like, man, Abel, but GDP going up, isn't that a good thing for our economy? It is, right? That shows that we have a strong economy. But because of GDP going higher, that's also causing the cost of goods to increase. Now, the cost of goods increasing wouldn't be an issue if wages was also increasing as the price of goods was increasing, right? Like if we seen the price of goods go higher, but yet the amount of money that people were getting paid was also increasing, then inflation wouldn't be an issue whatsoever, right? That is actually something that we would probably recommend and we would actually encourage. But since that does not happen, and since wages is always behind the ball and wage increases happen way too slow, that's why inflation needs to be fighted and or battled, and that's why we're now in the process, guys, of literally that being the main focal point for the Federal Reserve. So these are just things that I wanted to talk to you guys about to start off today's day. Again, because we did have this initial release, I expect, guys, more jobs, more people to file on unemployment as the months continue to go on. By the end of this year, I expect this number to hate this stuff. Like I used to hate fundamental analysis because it involved doing a crap ton of research, right? And I hate doing research. But as a Forex trader and as me attempting to be the best Forex trader that I could potentially be, it involved me actually starting to get into this stuff. As I really started to become educated in the fundamental aspect of trading, I realized how interesting it really was, right? Especially when you really understand how the markets, the currency markets actually correlate based off the data, and then you see your results start to improve off of that. Man, you're really going to start to like and understand, guys, exactly what is going on. So that's pretty much where I've been at. I used to hate, pretty sure I'm not the only one, right? I used to hate trying to really do my research and all this data. Let's see. Let me know, guys. Let me know. Let me see real quick. Hold on. Okay. Let's see. I think we are good now. Family. Let me know if you guys can hear me. We should be good to go now. I believe we are back. We should be back. Right? Drop a 7 in the chat, guys, if you're back, right? I'm drinking consistently because it got hot in my room. There we go. I don't know what was going on. Right? You know how it is, though. Every time we provide real massive value, you know, there's always something trying to stop us from really getting to the next level, family. But it's all good. Right? We are back. Anybody that's listening, make sure to be live. Make sure to go ahead and click on the live button so that you are actually watching the actual live of it and you are not catching too much of the delay. Right? But overall, like I was saying, family, right? We are looking at data because data is extremely, extremely important. And that's why we've pretty much been beating it all the time as much as possible. Right? And let's go ahead and get into the markets, guys, and see what we ultimately got going on here. All right, and see what we can ultimately come up with But just taking a look at the markets, guys, again, we have not done anything at all. Like, look at this, right? Like, look at the dollar as a whole, right? The dollar has not done much. We pretty much has been trading inside of this little triangle, this little range, guys, this entire week. Let me see. No sound. Let's see. Can you guys hear me, family? Drop a 3 in the chat if you guys can hear me. All right, because my mic is on, my mic is working. We should be good to go. Sound shouldn't be an issue. All right, yeah, so sound isn't an issue. Sound is not an issue, right? So, again, if you're hearing issues too late, just refresh your screen, right? Refresh YouTube, refresh the video, and you should be good to go. Refresh the video, and you should be good to go. Okay? Yeah. All right, so, like I was saying, guys, we haven't seen nothing at all this week. Like, the market has been very, very choppy, very range-bound. I mean, look, at the start of the week, guys, happened right here on the 20th. And we're literally trading at the same exact level that we opened up the week at. Like, literally at the same exact level, right? We opened up the week at 104.06. We're currently trading at 104.06. So it's been a very, very choppy week, guys, for a lot of the USD correlated pairs. I mean, if we take a look at most of these pairs, look at gold. It really hasn't done much at all. Right, we're trading a little bit lower than where we opened up the week at, but we're still not doing much, right? We're in this range. Euro USD, similar concept, right? We're still trading inside of this range. The week started over here, right? The week started on the 19th. Yeah, we're pretty much trading at very, very close to the same levels that we actually started at. AUD USD as well, right? Choppiness. GBP USD, choppiness. USD CAD. Choppiness, USD/JPY, right? We seen a little increase to start the week, but now we came right back down, to where we started trading at the beginning of the week. Choppiness, right? So a lot of these pairs that I pretty much like trading, we really haven't gotten too many opportunities. Because any of the trades that I actually took, guys, right? All the positions that I was able to jump into, I was getting stopped at break even for pretty much a lot of them. Right, and that's just the struggle when it comes to trading pairs that are in the process of just more accumulation, and these are things that are gonna happen, right? We're gonna see these issues in these type of markets, guys, occur, and it is what it is, right? Your ability as a trader to be aware of the fact that market conditions are more range bound is very big, right? Because this is the time of market, guys, where you might want to just be, more of a scalper more than anything. Okay, so for what I've been doing, guys, right, since I've been noticing that the markets have been very, very range-bound, we talked about this yesterday as well, right, that the markets have been very choppy. This is the time where you really just get in, grab some pips, and get out, right, where you don't try to hold for those long-term positions, those long-term trending type of trades, because the market conditions are not showing that right now. What I've been doing, personally speaking, right, is I take a trade, and then whenever I get to a good point in time, I go ahead and I go break even. And then once I get to the high of the range, I typically close partials. And then I just let the market do what it does. For damn near 90% of the trades that I took this week, I've done that. And I've been able to still close partials. But every single time the market came back and also stopped out the remainder of my positions in pretty much at break even, right? So I really didn't lose at all. So I still have growth overall in my account. But it's very, very small growth compared to what I've been expecting overall. Because I'm more of a trend trader, right? I like to jump into trends, guys, and ride trends for sure. But these market conditions, at least for the pairs that I like to focus on, really have not been giving us those type of opportunities because everything has been so choppy and so range bound. Now, one thing that has been moving for the most part, and even this one, right? Even GJ, guys, I mean, price is literally right back down to where we initially started at the week. Right, so I ended up taking an opportunity to buy GJ yesterday. Caught this little rise right here. I ended up closing out at these highs because, again, we are very range bound, and that was cool, right? And then the market overall ended up rolling over, going into London session last night. The other opportunity that I did take on GJ, I did have a couple buy positions, guys, that I attempted to take up in this area up here for GJ. and they did not end up playing out. I did end up getting stopped out on a couple of these positions that I took around this 165.2 level, and it was cool. It is what it is. Again, I know how to manage risk, so it's never an issue for me to take a loss. In fact, I really don't care about it. If I'm being honest, I'm not going to say I encourage losses, obviously, because nobody likes taking losses. But I don't mind my losses, guys, especially as me being an educator, me being a teacher, is because now I'm able to tell you guys that it's not a freaking big deal, right? Like that's the thing about taking losses, and for me at least, because I like to be relatable to everybody that's trying to learn from me, right? I'm not going to be one of these gurus on social media and on YouTube, guys, that just try to act like they win every single trade, because that's not true, right? Everybody's always showing their wins, and everybody also doesn't show their losses. For me, I don't care about my losses because I'm practicing proper risk, right? I'm doing my job as a trader. And I also don't care about my losses because it also shows you that I'm still relatable, right? That, yeah, I can have all this success trading. I've been trading now full-time for the past 4 years. I've made a lot of money, guys, over the past 4 years trading. I've been able to make multiple six figures each year for the past few years trading consistently. I haven't had my first seven-figure year just yet, but that is loading up, right? But I say all these things not to try to show off or try to showboat, but I say all these things to, again, be realistic with this, right? Losses are a part of the game. So I want you guys to understand that when you take a loss, especially if it's a good loss, it is what it is, right? That's a part of the process, it's a part of the game. It's like you being a professional athlete, right? Say you're a professional, excuse me, right? Say you're a professional baseball player, right? And you play, you know, for the New York Yankees, right? Shout out to the New York Yankees, #1 team in the league. Appreciate my Yankees, right? But say you play for the New York Yankees, right? And you are at bat, and you're trying to go against a really, really good pitcher, okay? The market, in this example, the market is probably the best pitcher in the league, whoever it is, while we're attempting to be one of the best batters in the league, right? Playing for the Yankees. So every time that the market is throwing a pitch at us, right, we are going to connect, especially if we're a good baseball player, we're going to hit that ball every so often. Are we going to be 100% accurate as a batter? Are we going to hit every single bat? Are we going to get on base every single time that we come at bat? Like, really think about this as a professional baseball player, right? I know all my baseball players in the chat know exactly what I'm talking about, right? Because, yeah, you would love to come up to bat and get on base every single time. But if you got on base every single time that you went at to bat, then you would literally be the greatest baseball player in history of mankind. Because there is not one baseball player that has gotten on base every single time. In fact, if you can get on base, right, if you can get on base 5 out of 10 times, 6 out of 10 times, then you can be an all-star. Am I lying, family? Right, where all my baseball players at? Am I lying? I don't think I'm lying. Right, so even professional baseball players that play for the Major League Baseball, right, the MLB, they're not getting at base every single chance that they can. How they respond to them not getting at base is also going to dictate their next at-bat that they actually go up to bat. Because one thing that you notice about professional baseball players is that when they go up to a bat and they're going through a quote-unquote a slump, they still continue going. They're still attempting to get on, right? Because they know that that slump is not going to last forever because they practiced that swing. They practiced this sport for years and years and years. Same thing with trading. We practice this enough. We backtest this enough, guys, that even when we do go through a period of losses, we still have the confidence to understand that in the long-term perspective, we're going to be up. That's the name of the game here. Okay? I hope this is making sense, guys, right? So really just look at it like in that perspective. You're not going to win every single trade. It's impossible. So do not let those periods in times where you do take some losses dictate what you do moving forward. Like I said, I ended up taking some losses, guys, earlier today because I was trying to buy GJ around this level right here. Right, I wanted to play off of this order block right here, right? I seen the market go ahead and spike up higher, give us a nice strong push. We did obviously come to this resistance. We seen price come back down. I wanted to take a buy off of here to see if we can actually go ahead and break that resistance and continue going higher. The market did obviously not do that for me, right? So I did end up taking an L on this position. I actually had 2 positions open, right? And I was risking, I think, around 3% in total, 3-4% in total. And I took some losses on that. Now, what most traders would do, guys, the ones that are not emotionally there just yet, right? They're going to take that loss and then they're going to allow that one loss to really get them into a state of undisciplinedness, right? That's not even a word. Undisciplinedness, that's not even a word. I just made that up, right? But they're going to get into a period in time, guys, because of that loss. Now they're emotional because of that loss. Now they're going to become undisciplined. They're going to lose all sense of logic, and they're going to start trading emotionally. And that's what usually leads to a blown account, right? I say this all the time, guys, right? It's usually not that first loss that you take that leads to a blown account. It's how you respond to that first loss, how you're thinking mentally after that first loss that usually leads to that blown account, right? It's the trades after that first loss. But for me, I'm very much aware that a loss, it is what it is. So yeah, I took some losses here for 4% or 3-4%. But I was able to catch a banger trade down here at these lows, and I was able to ride it up to this level of structure, and I ended up taking profit right back up at these levels where we pretty much started reacting off the 50-period moving average, right? So overall, I made back not just that 4%, guys, but I also made some profit on this position as a whole. And that's the name of the game here, right? Your name of the game, guys, is to be able to take the outcome of your trade, whatever it is, whether it's a win or loss, not allow that to affect you mentally, and then you can go ahead and find the next position and still trade it based off logic, not emotions. Right? I hope that makes sense, guys, right? Because that's really the name of the game here. Right? Are you able to manage and control your emotions throughout all aspects of trading, yes or no? Right? Whether it's a win or a loss, family. Let me know if you guys can hear me, man. Let me know if you guys can hear me in the chats, right? Drop some threes if this is making sense. Drop some threes if this is making sense. I see we got Ronnie Ruiz in the building. What's going on? We got Brother O in the house. What's up? What's up? I appreciate you, Brother O. Welcome to the family. Or shout out to you for being in the family right now. Shout out to you for being on the call. Definitely appreciate seeing your name in there. Let's see. I killed that drop there in London. Let's go, Tony. First attempt hit my stop loss. I waited for the break and caught the rise. See, that's what I'm talking about right now, Tony. Exactly, right? You took a loss. You kept your emotions in check. You found the next logical opportunity. And then you reacted the way you needed to. And because of that, you caught a banger of a trade, right? That's what I'm talking about, right? That's what the best traders in the world are able to do, okay? They don't react emotionally based off the outcome of a trade, but they react logically, determine if the setup is still good, and then they go ahead and find the opportunity to jump in, and then they do what they do, okay? So I appreciate all you guys that also dropped the threes and let me know that you guys can still hear me, right? I see we got the guy Modi in the chat. Modi, what's going on, my brother? I appreciate you, bro. Good to see you in the chat as well. All right, so what do I think can happen now, guys? Because for the most part, like I said, a lot of these pairs are pretty much very, very choppy, right? Like all of them are range bound. Like we're really not doing too much. And yeah, this is a very, very tough week to actually trade unless you're just pretty much getting in and out of the markets, right? Very, very quickly. Just grabbing what the market gives you and just dealing with it. But just to reiterate, guys, what I think can actually happen coming up, probably going into next week, I really would like to see the dollar itself, guys, potentially give us, again, there's two different outcomes that we could see, right? We can obviously see the dollar, guys, just go ahead and really keep that bullishness that we've been seeing, that we've been expecting for a while, is bullish strength, right? So we could potentially expect that to come in and then look for more continuations. That's one possible outlook. What I think is actually going to happen, though, is I think we're still going to see a short-term period of cooling off. And I would love to see, guys, the dollar ultimately come back down to, say, this 102.5, 103 level. And then from that level, guys, I will be very, very interested in really seeing the market go ahead and rebound and then continuing in that bullish trend. I truly believe, and it could just be me, right? But I truly think that we have not even seen the craziness of this quote-unquote downturn in the markets, guys, just yet, right? I believe that we are definitely going to see a lot more selling pressure or a lot more downside, guys, for a lot of these indice markets, okay? I truly believe it, right? Shout out to TFT Trader. I see you. Shout out to you for being our newest subscriber. Definitely means a lot for you to subscribe. Hopefully, I'm able to give you some value or some insight for sure. Right, but guys, like I said, I do believe that we still have a lot more ways to go when it comes to the stock market, the equity market, the asset market, whatever you want to call it. I think, guys, we're still going to see a lot more downside in terms of our economic growth is going to continue to decrease because I feel like a lot of these big time shot callers, right? A lot of these big time players like the Federal Reserve, Jerome Powell and his team, they're still underestimating, guys, exactly the bulk of what is really happening right now. Now, again, they are technically the professionals. I'm just me, a retail trader in the background, right? But I've been doing so much research that I truly believe that they still don't understand how bad this sell-off is actually going to continue to happen, right? So I'm still expecting, guys, especially for a lot of these indices, 'cause I know a lot of you guys trade indices, right? I'm still expecting a lot more downside, right? A lot more downside to come into play, right? Especially over the next 6 to 12 months, I do believe we're going to see more downside. Now, keep in mind, guys, right? At the end of this month, right? At the end of this month is the end of quarter 2. At the end of this month and the first week of July is when we're going to see what the new GDP numbers are. If GDP comes out negative, if it's showing negative growth, then that is going to be the start of a quote-unquote the recession, right? That signifies that we are officially in a recession over here in the U.S. So that is also something, guys, that we really have to be aware of. And that could also be a reason why a lot of these markets, guys, have really been very choppy. Right? It's because a lot of investors, a lot of traders are pretty much more so sitting on the sidelines right now because everybody knows that the recession, possibility of a recession is really about to show over the next week or so, right? So we're really about a week to 2 weeks away before we get that actual confirmation that we are in a recession. Now, I truly believe that we've been in a recession already, but obviously we have to wait for the textbook definition of it, which is 2 negative quarters of GDP back to back. So we'll see what comes out with that. But here's the thing. If we do come out negative growth and now we are in a recession, that's just going to cause a lot more fear, a lot more chaos, a lot more uncertainty in the markets as a whole. And we have to understand, guys, how to trade that. Okay? I'm going to keep on giving you guys the hints on doing research on certain things. And I want you guys to research risk on versus risk off sentiment, because that is extremely, extremely important for you to understand as a Forex trader. Okay? We go in depth about this stuff during the boot camp, and that's why also another reason why I'm extremely excited about the boot camp, because we're about to go all in with that, really teaching you guys exactly how to understand risk on versus risk off sentiment, right? So overall, though, I still see a lot more weakness, guys, in the overall markets to come in. I still expect, overall negative growth to continue to occur. I wouldn't be surprised, guys, if we do end up really not just dealing with a recession overall, but I do think that we're also going to go ahead and eventually see a possible depression, which a depression, guys, is classified as a period of time of a longer period of time of negative growth. But really, a depression is classified when you see GDP coming in at negative 10% over the course of a year, right? Within a year's period, we see the economy decrease by 10% overall. That is really signaling a depression, right? And again, it typically lasts, guys, for a much longer period of time than just 2 quarters, right? We're talking about, for a year, 2 years, 3 years where we see negative growth occurring. And again, it's crazy to say, but that's literally where we're about to lead into, right? Everything that's been happening in the world, guys, for the past 2-3 years, especially with COVID pretty much causing all this chaos, is going to lead into a possible situation where that is an actual possibility. And the crazy thing is, again, we got people like Jerome Powell who's still trying to downplay this. And it's crazy because they have access to way more information and way more data that we have access to, but yet they're still trying to downplay the severity, right? The severity of everything that we're about to experience. That's just me, right? They're still downplaying it. Now, I get it, right? Jerome Powell's role, right, especially as the chairman of the Federal Reserve, as the head of the central bank, guys, which is central bank's job, they have 2 main jobs, right? To have stable prices, which we haven't seen, and to have a strong job market, right? Those are the 2 main jobs of a central bank, right? It's to have stable market prices and also have high job numbers, right? Low unemployment. Right now, again, they're dropping the ball on one of them because of inflation. And yeah, we still have technically a strong job market, which is why they're still talking all this positive stuff, why they're still very optimistic, is because the job market is still very strong. But like I mentioned, the job market is the last thing that gets affected, right? Because when we have assets, guys, that are now losing value, that is going to cause for now a lot more pain overall for a lot of consumers like me and you, right? Which is also eventually going to lead to a lot more pain for the businesses, which is going to cause them to start firing people, right? So yeah, they're still banking on us having a strong job market, but the job market in itself, guys, is also literally going to be the last pretty much domino that falls. And then when that domino falls and they start crying this and that, by that time it's already going to be too late. So trust me, they're doing this horribly, right? And again, I'm not a master, right? I'm not saying that I could have handled this at all, because again, they do have a very, 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 very tough job. But they just need to come out and tell people what it is, right? Stop trying to beat around the bush. Stop trying to still bring optimism in a situation where there really shouldn't be no optimistic outlook, right? We're going into a recession. Shit is about to hit the fan. Shit's been hitting the fan. And at least all of you guys on this call, right? Every single one of you guys that are listening to my voice, at least you guys are aware of this stuff, right? Do not fall for the BS. Even though, and it's crazy for me to say this again, because I'm really a nobody, right? I'm really a nobody, right? And me saying all this stuff about the chairman of the Federal Reserve, yeah, you might look at it like, yo, this dude is crazy. But I do my research, and I'm looking at things from more of a logical perspective. I don't have an agenda to uphold, okay? These central bank figures have an agenda to uphold, which is why they're playing the game the way that they're playing, right? They can't afford to cause too much panic in the market, because then that's really going to send us into a crazier recession, which is why they're always trying to beat around the bush. But you guys right here, every single one of you guys that are listening to my voice, you guys have the ability to be aware of this stuff, and you guys also have the ability to not just benefit from it or position yourselves to be okay about it, but also to profit from it. Okay? Just saying. Just throwing it out there. All right? Again, take what I say with a grain of salt if you want. I always recommend everybody to just, anytime that you hear somebody speaking, right? Anytime you hear anybody you guys take advice from, anybody you guys listen to, shout out to Mr. Smoke and what's going on. I appreciate you, Mr. Smoke. What's up? Right? But it's something I highly recommend you guys do, because I do this myself. Anytime I learn something new, right, and I get advice or data from somebody, I always make sure I go and double check and triple check that information. So everything I'm telling you guys right now, don't just take it and just listen to it. I advise you, go and double check what I'm saying. Go and triple check what I'm saying, right? And if you have something else that goes against what I'm saying, please bring it to the community and we can have a general conversation on how we can react and respond better, right? That's pretty much how I like to approach it. But overall, I expect way more selling off of these assets, guys, to come into play very, very soon, right? And if that's the case, right, if we do expect a lot more selling pressure, right, and this is the big thing about risk on and risk off sentiment, guys, right? Because when we see the overall equity market as a whole, right, the equity market as a whole, which includes the indice market, when we see this actually selling off, this is what we call a period of risk off, right? Let me actually show you guys and break this down, right? So this entire rise right here, this entire increase in the market, what would this be considered? Risk on or risk off, family? I know we got a lot of you guys in the chat that have been paying attention to me for the past few weeks, and you guys are aware of this stuff, so go ahead and answer this in the chat, right? This entire period right here of growth, was this more risk on or risk off type sentiment? Let me know in the chat. Let's see. Can we see gold? Yeah, I got you. We'll definitely take a look at gold. Let's see. I'm thinking we'll retest the March 2020 lows. It's definitely very possible, 100%. I definitely see that as well. Let's see. You can also check the short and long-term bonds for an inverted yield curve. Also a strong recession indicator. 100%. You're definitely right, Loveline. Right? You're definitely right. That is definitely a very, that's probably one of the most commonly used tools to pretty much predict a recession. Right, because every time those inverted yield curves actually show, a recession almost every time happens. Right, but again, the question was, guys, for the S&P during this period in time, right, just this short period in time right here, right, where we see the markets going higher and higher and higher, was this risk on or risk off? Let's see, risk on. Yep, Stevie Kicks, exactly. Risk on, risk on, risk on. Yep, risk on, right? Guys, during this period of growth right here, right, this was considered risk on, right, risk on sentiment in the market. Now, why is it considered risk on? Right? Because stocks, indices, the equity markets as a whole are more considered riskier assets, right? They're considered riskier plays. So whenever you see this type of market occurring for the actual, say, indice market, just to keep things simple, that is showing that traders overall are more so in a risk on environment, and that's pretty much telling them to definitely go ahead and take on more risk. Now is the time to take on more risk. Now, why is it also, why do you think these type of things occur? Right? Well, it also plays into pretty much, the policies for the Federal Reserve. Right? The overall policies for the central bank also plays a big part. Right? Because when we have low interest rate, which is what we've seen here, guys, all of this was occurring because we also had, for one, a lot of money that was being poured into the economy. Right? We had dollars being printed all the time. Right? Especially because of, obviously, COVID, was sent all the stimulus packages that were being printed every single day, all the bailouts that were occurring, all that stuff is adding more money into the circulation, right? That's just literally going ahead and propping up this economy. But also, when we have low interest rates, that causes people to be more okay with borrowing a shit ton of money. And that also makes it easier to get access to money. So risk on with low interest rates is more of a risk on, or is more of an opportunity for people to go ahead and start taking riskier plays. So this whole period right here was risk on. But now, if that is risk on, then what is this period right here where we're starting to see the market correct? What is this period called? What is this period called right here, guys? What would you guys say this is called right here? Right? This period right here. All right? If this is risk on where we're seeing growth in the equity market, then what is this? It's got to be the opposite, right? It's got to be. Let's see. Man's a genius. Shout out to my boy Kyle. I appreciate you, my brother. Able to use supply and demand as an edge 100%. Supply and demand is honestly very, very crucial and very important. Right? In fact, these markets, guys, really play off of supply and demand. Right, but yeah, guys, so when now we're seeing, again, the equity markets, the indice market as a whole, now that we're seeing start to sell off, where people are now selling, are a lot of investors and traders are now starting to, sell off their assets, this is what we call risk off sentiment, right? Where it's pretty much a time for you to go ahead and take the risk off of the table, right? Again, risk on, put the risk on the table, be a lot more riskier, invest into riskier assets. Risk off, take the risk off the table and go ahead and get invested into the more safer plays, the safe haven type of assets. What are considered safe havens, guys? Go ahead and answer this in the chat. Go ahead and answer this in the chat, right? What are considered safe havens in the market? Somebody teach me something. I'm new. Right? What are the safe havens that we have access to? Yep, gold is one of them for sure, right? Which gold in itself really has been very choppy lately, but gold is typically used as one of the safe havens for sure. The dollar is another one, yep, right? USD has probably been the best safe haven to really invest in over the past year, right? I'll be honest, the dollar has probably been the safe haven, right? The safe haven by far. Right, we have the Japanese yen. Yup, the Japanese yen was typically looked at as one. Over the past couple years, though, the Japanese yen's, the Bank of Japan, the Central Bank of Japan, their policies have really made it harder for the Japanese yen to be looked at as a safe haven. But typically, it always has been considered a safe haven. All right, then we got the Swiss. Again, the Swiss as well over the past few years. Typically, it was looked at as a safe haven, but over the past few years, because of their central bank's policies, it really hasn't been it hasn't been acting like a safe haven. But yeah, technically, it always has been looked at one. And then we have, again, U.S. bonds and U.S. treasuries, right? Those are considered all the safe havens, guys. So we have gold, the U.S. dollar, the Japanese yen. I'm not even going to consider the Swiss franc a safe haven because, again, it hasn't really been acting like a safe haven. So I'm just going to go with gold, the U.S. dollar, and bonds, U.S. bonds and treasuries. Those have been like the main safe haven plays, right? Where in times of chaos, in times of fear, in times of uncertainty, in times of doubt, that's where you want to put your money. Because although you're not going to make too much money on your investment, at least it's going to keep you from losing money. Right? Typically, those assets, guys, are a lot more stable during times of chaos. That's why they're considered safe havens. So, during risk-on sentiment, safe havens usually go down in price, right? Actually, I'm going to give you guys a treat, right? Let me actually bring up a screenshot. Because this is actually something that that I have for the boot camp itself. But I'll show you guys. I'll show you guys this one right here, right? Because it might help you guys out for sure, right? Let me actually go ahead and give me 1 second. Let me do some things to this. All right, and again, this is literally a part of the boot camp. So shout out to all you guys that are getting this right now, because I was really gonna keep this for the boot camp. But you know what? It is what it is, right? We're gonna go ahead and give you guys some sauce tonight. Right, we're gonna give you guys some sauce. Let me see. Is this it? No. Nope. Nope. Where is that at? Where did I put it? We're gonna give you guys a nice little look real quick, right? And again, I'm gonna be honest, right? All of you guys that are really trying to be educated in this, I know the smart one of you guys, and I'm not saying nobody's dumb or anything like that, but the smarter ones, you know what you guys are gonna do? You guys are gonna take a screenshot of this. Right? You guys are gonna take a screenshot of this, right? The smarter ones are gonna take a screenshot of this. Replace it. Okay. The smarter one of you guys, which again, I believe all of you guys are smart. I'm not trying to, be disrespectful. That's not my thing. All right? But the smarter ones of you guys are definitely gonna go ahead and yeah. You guys are gonna go ahead and take a screenshot of this for sure. Alright, let me see if I could bring this up now. Whoop. Let me bring this over here. Alright. I want you guys to take a look at this, right? This is the cheat code right here. Alright, this is the only free sauce that I'm giving you guys that's a part of the boot camp that would really, really change the game for you guys. So again, all the ones that really want growth in this lane, you guys are taking screenshots of this right here, and I got it big for you guys and all that, right? I got it big for you guys and all that, so you guys can really get this sauce. Let me know. Drop a 3 in the chat once you took your screenshot, so I can see everybody taking this street. And this is the only sauce you getting, right? Because again, the sauce for the boot camp is for the boot camp. But I'll give you guys this right here, just because I love you guys, right? And I truly wanna get back to the community, right? So once you take that screenshot, once you take that screenshot, drop a 3. I see we got JP in the building. What's going on, JP? Appreciate you subscribing to the channel. Let's see. All right, we got 3. Shout out to you, Saucin. Right, we got 3. All right, and again, a lot of you guys that are dropping 3s are actually going to be a part of the boot camp too, which is crazy. Let's see. You only have 100 in the joint. Yeah, we growing. Right, we growing, Romel. Right, watching the next 2-3 months though. Right, we're gonna be getting 1,000 consistently on these streams because I'm really providing that real value, that real sauce. That real sauce. Let's see. Yeah, look at all the 3s. That's what I'm talking about. Now, I want you guys, don't just take the screenshot, but actually study this stuff. Right? Actually study this stuff. Because, again, how many of you guys in the chat right now, right? How many of you guys in the chat truly feel like you were actually pretty good at technical analysis? Like, how many of you guys truly believe that you guys are actually pretty decent in technical analysis? Let me know. Right? Because I'm pretty sure, I'm pretty positive that there's a lot of you guys in the chat that are probably pretty good at technical analysis. Probably even better than me. But is it correlating to profits now? This is the real about it, right? Because you can be the best at technical analysis, right? And still not make no money. Still not see consistent results. That's where I was. Right, again, I tell my story, guys, and my background all the time. Right, I've been trading now for 7.5 years. My first 2-3 years was very, very rough. I made no money, no withdrawals, all blah 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 stuff. Right, I like to say it again and again just for our newer members to the family. Right, again, 7.5 years. My first 2-3 years, I made no money whatsoever. I took blown account to blown account to blown account to blown account. I probably blew more accounts than every single one of you guys on this call combined. I mean, I don't know about combined because there's a lot of you guys tonight, but that was my story, right? And then I eventually got good at doing technical analysis because eventually that's all I was focused on. So it got to a point where, yeah, I was Picasso, right? I was Picasso on these charts, right? I was the best. I felt like I was the best at marking up charts, right? My charts were so pretty, it was crazy. Like I had the prettiest charts in the world, but I also still wasn't making no money off those pretty charts. I mean, again, I know a lot of us can relate to this, right? And it's cool if some of you guys don't want to say it. It is what it is, right? But even though my charts were very pretty from a technical perspective, I still wasn't making no money. I wasn't seeing no consistent results. I wasn't seeing enough consistency for me to leave my job at the time. But I did get better. I got better. I got more discipline. Right? So yeah, I was able to eventually see a lot of money and a lot of consistency. Right? Even just focused on technicals. Right, to a point where I was making a crap ton of money back in 2017, 2018. I had a breakout year, and it was really because of not just technicals, but because I really perfected risk management. I really perfected the mindset. Right, I really perfected also really knowing how to control my emotions. So yeah, because I was very disciplined as a trader, because I developed patience, yeah, I was able to really become profitable solely off of technicals. But I never had a massive, like multiple high six-figure year. But what happened was, and this is what happened over the past few years, right? Literally recently, right? Over the past 2 years or so, I really started to understand fundamental analysis a lot more. I actually enjoyed back testing how the market reacted to data and releases of news. And then I really started to get good at understanding sentiment. And that's what changed the game. And then over the course of the past year, the past 12 months, right? Probably 12 to 18 months, I finally really started to understand risk on and risk off sentiment. And that really changed the game for me. Right? That's what took my trading to a whole nother level. So again, for all my Picassos on the chart or in the chat, right? All of you guys that are really good with technicals but are still not seeing consistent results, this is the missing piece. Understanding fundamentals is the missing piece. Understanding understanding sentimental analysis is that missing piece. Right? Because once you actually understand those aspects of trading, it's going to take your trading up to a whole nother level. And it's not just going to take it up to a whole nother level, but once you master discipline, once you master emotional control and all the habits, then you're really going to start to see the profits that you're actually after. Then you're going to really start to see the, those breakout trades and those, 5-figure days, 5-figure months trading, and you're going to be able to see it consistently. That's just a fact. Right? That's just a fact. Right? So again, it's all about really just developing, guys, the key things that it really takes to really see, the results. And, that's a part of it, right? So shout out to every single one of you guys that actually took that screenshot. Study that picture that you guys took. If you study that and you understand risk on and risk off sentiment, it's going to change the game for you. Okay? Very simple. So again, back to what we were talking about. Indice market, during periods of growth, we're in a risk on sentiment environment where people are taking more risk. During a market decline, right, when the market is losing value, we are in risk off sentiment. We can also correlate this, right, to how interest rates affect us as well. Right? Because interest rates also can tell us if we're going to be risk on or risk off sentiment. Write this down. Lower interest rates, right? If we have low interest rates where we seeing rate cuts occur, right? Or we're just already at super low interest rates, that is going to lead to more risk on sentiment. Low interest rates is going to cause risk on sentiment. High interest rates, like when interest rates are starting to go up, which is what we're seeing now, that is going to lead to risk off sentiment. I hope this makes sense. Right? Yeah, JFX, exactly, right? Low rates, risk on. High rates, risk off. Oh man, giving y'all too much sauce, family. I'm telling you, this is that value. This is that value that you're missing. This is that sauce that you've been missing. And I'm glad it's me the one to bring it to you. All right, this is what I'm here for. All right, again, for those of you guys that are just now finding my channel and just now finding out who I am, I've been educating guys for the past 3-4 years. Right, I was actually a part of, a previous company. I'm pretty sure every single one of you guys probably heard of it. IML, right? IM Academy. I was an educator for them. I was an educator for them for 3-4 years. And even in that platform, even though I've taught thousands of, I'm talking about, I was probably the foundation, and I say this in the most humble way, right? But I was the foundation for thousands of students in the beginning of their journey, right? Because I was the quote-unquote basics educator, right? I was the one giving them the foundational stuff. So I was never able to really teach them this type of information on that platform. I never did. I never had the chance to because I couldn't. Because I had to keep everything so basic that the newest person that came in can understand it. So even then, even in that platform that I taught for 4 years that I was getting paid to teach, I never even taught this value because I couldn't. But now we're here. Now we're here. Right? See, now I have my own platform. Right? Which is why I'm so happy about YouTube. Right? Which is why I'm so happy about this route that I'm taking, right? It's because now nobody can tell me what I can and can't teach. Right? No, now nobody can tell me what I can and can't do. Now I could really give you guys the value in the sauce that I know is really going to help y'all out. And that's what I truly love most. All right, shout out to JP as well, newest subscriber. What's going on, dog? Appreciate you. Let's see. Are you still taking people in your boot camp, right? So, yeah, I actually am. Right? The boot camp is literally happening this week, though, right? Literally in like 3-4 days on Monday. This Monday coming up is when the boot camp starts. Right? So I was going to close off the boot camp, but I had a shit ton of you guys, right, actually hit me up and like, yo, Abel, I'm paying this week, man. Don't lock it up. Don't close the boot camp, bro. I know you said you were closing it on Saturday, bro, but please don't do it. I want to be a part of it. And again, I'm a servant leader at the end of the day, right? I want to make sure that everybody that truly wants to be a part of the boot camp actually gets access to the boot camp. Now, again, this is not going to be the only. This is my first 5-day boot camp, but it's not going to be my last neither. But if we're being honest, my next boot camp isn't going to happen for a few months, right? It probably won't happen till like August or September. And it's definitely not going to be at the price that it's going for right now. Like the price that everybody's paying is pennies to the value that you're about to get. If you think you're getting value just from this stream right here, man, you have no idea the value that I'm going to be dropping when I actually have structured plans and structured PowerPoints and all that stuff that everybody's getting. Just being honest, right? So, yeah, if you want access to the bootcamp, in the description below this video, there is going to be a form that you have to fill. And there's also going to be an email that you have to email once you filled out the form telling me that you are ready to get plugged in and that you are ready to secure your spot for the bootcamp. And I'm so confident in this bootcamp, even though typically you don't ever see a money back guarantee type of deal when you're giving out education, because again, that's intellectual property. That it is what it is. It's education. But I'm so confident, guys, that I know for a fact that even if I did give a money day back guarantee, and if you didn't get no value from the bootcamp, I'll send you your money right back, that none of you guys are going to send it back. Like that's how confident I am. And again, I hope I'm not coming off egotistical or anything like that, because anybody that really knows me knows that my ego is very minimal. Like I have no ego whatsoever. In fact, me saying I have no ego is me having an ego. So I'm going to say my ego is not crazy. All right, it's just me being factual. All right, me understanding what most traders focus on in their journey, and me bringing the change to that, right? And me showing people what really needs to be taught and really needs to be, learned. So that's pretty much where that comes from. But overall, guys, like I said, man, it's really been a very choppy week overall. Really haven't seen much at all this entire week. Honestly, if nothing really comes up, if nothing really shows, then I don't even know if I'm going to be taking any other opportunities. I mean, things like EURUSD, guys, like I would love to see the market come up to this level up here and then give us an opportunity to go ahead and go short on. That's what I'm going to be waiting for, keeping my eyes on. But again, we really haven't been doing nothing, right? We've been literally in this entire range this entire week. So yeah, if we do for whatever reason get a nice strong spike up to the upside, then I'll be looking for that shorting opportunity for sure. But again, I can't force the market to, to move, right? We don't control overall market direction. We just control what we decide to do. Right? Shout out to Erkin. What is going on? Shout out to you for being our newest subscriber. I appreciate you. Thank you for subscribing. All right, so Euro USD, though, this is still what I'm looking for, right? I want to see an increase in the euro dollar to then eventually go ahead and give us an opportunity to short. That's really going to be my outlook, at least for right now. Yeah, for the euro as well. Yeah, that's my outlook, guys, what I'm looking for. Right, GBP USD, very similar. Again, really haven't been doing much, but I would love to see an increase in the pound dollar for then eventually for this to then go ahead and roll over to the downside. And I do appreciate every single one of you guys that always drop the welcomes as well, right? BTC Mommy, I appreciate you. Kyle, I appreciate you. Big Bert, I appreciate you, my brother Bert. Thank you for always being such a strong supporter of the channel, a strong supporter of this this movement that we're creating. And just because you do show so much love, Bert, that's why you were able to become a moderator, right? Because one thing about me is I love putting people in position, right? And that's what I love doing, right? So big shout out to you, Bert. I appreciate you. And also Martha, I appreciate you as well, Martha, for also dropping those welcomes in the chat for our newest members. It means a lot to me. But like I said, overall, guys, I want to see, pound dollar give us some type of move like this. That's what I would like to see. So on a short-term basis, right, short-term opportunity, then maybe we could, if pound dollar is finally able to start to see this, if we are going to predict, say, this breakout to the upside, then you never know. Maybe we could see price, again, now I'm on the smaller time frame, guys, a 15-minute, right? But maybe we can go ahead and see price, give us a pushback down to, say, this 1.225 level. And then from there, give us an opportunity to go ahead and go higher. Reason why I would like that is because what have we been doing in terms of structure? Overall, we've seen a massive push up that broke structure, right? So we created a higher high. We went from a lower low to a higher high sequence, higher low, lower low, or lower high, lower low. Same high. We did create another lower low, but ultimately it's still a higher low compared to these lows. If you look at these higher lows, guys, we are creating higher lows consistently. So there is a chance for price to come back, create this new higher low, and then give us that breakout, right? That's very simple market structure. Being able to restructure and price action, guys, is very, very important. Those are two key components of the market as a whole. And that's pretty much how you read it, right? Just look at the higher lows, higher low, higher low, higher low, right? So if price pulls back into this range, there is an opportunity for price to give us a higher low and then go ahead and give us that breakout move and then potentially give us an opportunity to go ahead and ride higher. Right, and again, and the reason why I like this, because the risk to reward is going to be absolutely phenomenal, right? And this is something, guys, that I would definitely take every single chance. In fact, depending on how I act off of this stream, I might end up taking this, right? And I will not have no fear of taking a loss on this because I'm managing my risk, right? So this is not a bad play because stop loss itself, right? We're talking about entry down here at around 1.225. Right down here, stop loss is going to be down below this swing low right here. Because again, I want to see a continuation of these higher lows being created. Okay, so stop loss below this low. We get our entry. And then we can go ahead and not just target back up to these highs right here. But I really like the market to go all the way back up, not just to this high, which again, even that high is giving us a 7 to 6. But I want to see price come all the way up to this 1.24 level, 1.245. Right, that's where I think that we can actually see price really get to. Now, if we look at this, guys, look at the risk to reward. That's a 9.94 to 1 risk to reward. So pretty much a 10 to 1 risk to reward. Right, which means we'll be risking 2% on this opportunity. Right, 2% risk. And what are we going if it's a 2 to 1? Or not a 2 to 1, a 10 to 1? This is massive. All right, look at this. Risking 2% to go for 20% gains. That is insane. That is the name of the game there. Right? That's why for me, guys, like historically, I'm only around maybe, I would say 60, maybe low 70% accuracy. Maybe low 70. But for the most part, like over the past few years, I'm like around 65% accurate, right? So I'm not winning 100% of my trades like you guys. I'm not going to say everybody, right? But like a lot of traders expect a lot of these dope traders to know. I'm hitting at like a 60% clip right now, all right? 65% clip. And that is perfect for me. Why? Because I also focus heavily on risk to reward. So I could take a couple losses, but then catch a trade like this that actually plays out, and I'm in the money term. Like I'm swimming in money, right? I'm swimming in money. Because 20% gain, guys, off of just a 2% risk opportunity is actually very possible. This is an opportunity. And worst case happens, we lose. We only lost 2%. Best case scenario, it goes to take profit. We just made 20% gains. Depending on your account size, that is massive. For anybody that's using one of those prop firms that's trading funded accounts, you're passing every single phase of the challenge easily. If you can make 20% gains, guys, like say you actually are on the live account part of a $100,000 account, right? Because I know we're going to have a lot of profitable fund traders, prop firm traders in here, where a lot of you guys are actually going to get funded and qualify for a funded account. Imagine you had the 100K account, which is only like $500 to actually go through the phases to get that, right? If you made 20% on a 100K account, you just made $20,000 that you will now get 80% of, 85% of when you actually go ahead and get that withdrawal. Guys, that is crazy. $20,000 in a month trading? Like, that's nuts. That's amazing. And it's very possible, especially if you're leveraging one of these prop firms. Okay? I recommend my Forex funds. That's the one I use, or that I have been using. That's the one I've promoted a shit ton of times. But you can never go wrong with the industry standard of FTMO. FTMO is probably the most known one. It's definitely the one that has the most success stories created from it, because it's the most popular one. But if you could do something like this, risking 2% to make 20, that's all day long. No questions asked. That's facts. I have an FTMO account. I have 100,000. Let's go, real Victor. That's what I love to see, man. I know you're going to make this 20%. Right? And again, I'm not just saying off of just this trade, right? But I know you're going to hit them and take them for a lot of their money. I know you are. Let's go. I'm rooting for you, man. I want to see you get that withdrawal from FTMO. I would love to see it. Like go ahead. Encourage me. I want to see that motivation. Motivate me, right? That's what I love to see, right? I love to see people succeed. I love to see people win, man. Like, my motivation, guys, to really do these streams is to really see people win. And I love seeing people freaking win, right? So I can't wait for you to come back, Victor, and for you to say, yo, Abel, bro, I got my withdrawal, right? I got my withdrawal, baby. I made 5%. I made 10%. That's going to make me ecstatic, and that's going to make me go in my kitchen and take a shot for you. You know what I'm saying? That's really what I love, guys. I love seeing people win, man. Let's see. Just taking it to 1.2289, 1.7. There we go. There we go. That's not bad, though. Nice little quick trade. Right, but yeah, again, just keep in mind, though, the markets are very choppy. We haven't seen much. We haven't seen much all week, so just keep that in mind, which is why you want to keep your risk low. Right, but overall, guys, man, like I said, a lot of these opportunities, man, are just very, very hard to trade, especially like the trades that the assets that I trade, which are all dollar correlated pairs, because the markets have been very, very choppy, very, very range bound. You know, I've been very, very cautious as well because of that. And I'm going into tonight, going into tomorrow, it's going to be the same thing. I'm going to be cautious and see how the market plays out. Again, for those of you guys that are newer, I don't actively trade the Asian session. I do give, you know, potential ideas of what I'm looking for. But my main trading session is New York session. So I'm not going to be probably placing no trades tonight. But in the morning time, I will wake up early, 6 a.m., 7 a.m. I will run to Starbucks to get me my caramel ribbon crunch frappuccino. And then I'll come back home and I'm going to lock in. Right? That's literally my routine. I wake up early, 6, 7 a.m. Right? See what the market has done throughout London. Then I go to Starbucks. Give me a nice little caramel ribbon crunch frappuccino, and then I come back home and I'm locked in for the rest of the morning, right? And I'm usually done trading by I would say 12 p.m. Right by noontime, I'm usually chilling and I'm usually out the markets. Or if I'm not out the markets, I already have positions in that I'm just letting them ride out. But that's usually my daily routine, and it's been my daily routine for the past few years now. And yeah, it's been treating me well, right? But besides that, family, that's pretty much all I got for you guys tonight. As you guys can see with the actual night bot, if you guys are not a part of my Telegram family, please go ahead and add yourself into this public Telegram that I have created for every single one of you guys. It is an amazing community. It's literally just me in there speaking, nobody else. It is just a Telegram channel. But that's really where I come on here, guys, and I pretty much just literally share my thoughts. It's not always about trading. You know, I do drop a lot of quotes in there just in terms of mindset. I do drop a lot of different podcasts as well that I feel like are beneficial for the community. And I feel like it's just super, super valuable to be in that channel, because I really just be talking my mind. Like I treat that Telegram channel pretty much like my journal, right? Like any thoughts, any ideas that I have, I write them in my notes, but I also write them in my actual Telegram as well, and I just treat that as a journal. And I don't know, for me personally, I feel like it's been super beneficial for everybody that's been in it, and I know a lot of people have been able to get a lot of value just based off my little rants and stuff that I be dropping in there. So I highly appreciate you guys, especially everybody that's been tuning in. Let's see if Starbucks running low on the caramels because of this guy. 100% Kyle, you know the vibes. Right, I love that caramel, right? Even though it's a lot of sugar to start off the day, man, that's my burst. I need that. Let's see, nothing on gold. Yeah, we could take a look at gold. I mean, gold overall, like I said, guys, every single market has not been doing much at all. Right, like, look at this, right? Like, if you are gonna be trading these markets, very simple. Don't try to hold it for long-term biases right now. Right, it's just the market's been very, very choppy, and because of this fear of a recession that we're gonna figure out in the next couple weeks, that could be a reason why the markets are very, very indecisive, very, very choppy. Again, we have GDP. When is GDP? Let me actually see this. Right, let me see when GDP comes out. Let me see. It's gonna be that's gonna be for Q1. I want to see the next week. Nope. Yeah, I'm not sure. I'll get you guys the actual GDP release. Not GBP. GDP. All right, because this is when we're really gonna figure out when or if we are gonna officially be in a recession, right? So the next GDP release is going to be, let's see, let's go back here. Why can't I find it? I think I'm overlooking it. Like crazy. Let's see, gross domestic. Here we go. So July, right here. No, that's not it. I don't know. It's sometime in July, right? It is sometime in July, guys, when the actual release comes out. And once we do get it, again, that is when we're gonna figure out if, at least for the U.S. over here, we're gonna be in officially a recession or not. Let's see. Telegram is just as helpful, low key, no cap. It is. I'll try to tell people. Don't forget to hit the like button. I appreciate you, Martha. Thank you so much. I appreciate every single one of you guys that did actually hit the like button as well. I don't know. I might have to really host a live session on Zoom for all of you guys that are consistently, you know, showing love by hitting that like button as well. Going to start looking into my Forex Fund Rapid account. Hopefully by the end of the summer I can be ready. Oh, 100% BTC. You got this, mommy. Come on. You got this. Let's see. Currently moved over to the indices because dollar pairs have been taking my money this week. I mean, yeah, this is the thing about indices versus the dollar pairs, right? They're both playing off of risk on and risk off sentiment. But yeah, trade what you feel comfortable trading, 100%. If you feel like the actual dollar pairs have not been working for you, then yeah, hey, go do indices. Just understand indices are a lot more volatile, right? Especially depending on your broker's contract sizes with the actual indices. You know, indices are extremely more volatile. And the margin requirements as well for indices are usually a lot higher as well. Let's see, CAD yen. Yeah, I'll take a look at CAD yen. Even though I normally don't take a look at other pairs outside of what I like to look at, I don't mind taking a look at this. Let's see what we got here for CAD yen. I mean, overall, guys, CAD yen just looks like it really wants to drop. All right, we have been in a bullish trend overall, but we've just seen a lower high be created. We also seen price also eclipse this bullish daily candle. So I see more downside for CAD yen. Right now we're looking at things from a bigger perspective, but I could see CAD yen coming down to around 102.227. Right, I could see CAD yen coming down to around the 102.2 level eventually. Okay, so with that being said, if I was looking, say, for like an actual opportunity to get involved in, I mean, we are seeing price really start to react from a pretty strong level. So, you know, looking for shorts from where we're at now is probably not a bad idea. I mean, this thing is already starting to tank overall. But yeah, I do think we're going to see a lot more downside, at least, you know, for now, more downside, guys, for CAD yen. So if you're not already in a position here, then obviously we're already seeing price drop. So I will probably wait for a break of this range and then continuation like that. But that's what I'm looking at for CAD yen. CAD Swiss, yeah, I'll take a look at CAD Swiss. I know you've been asking for it, the maker. I got you. Let's take a look at that. See what we got here. Technically, order block. Let's see what we got here, right? I always like to look at things from a bigger perspective. I mean, we've seen a lot of bearishness right here for CAD Swiss. I mean, this pair is disgusting. Look at this range, right? And like, look at this range that we've been in really for, I mean, almost 8 years. This is disgusting price action. Disgusting. Okay, but what can we expect? What can we see actually occur for CAD Swiss overall? Right. Well, I mean, we're at a weekly order block right now. We did actually end up breaking below a key level of structure, but I could see us probably come a little bit lower, potentially a little bit lower for CAD. I mean, we are at another interesting level as well. Right. We're testing the 50-period moving average on the daily. I don't know. I could see us go lower though. Right, I could see us coming lower. Right, I would like to actually see, you know, CAD Swiss possibly come lower all the way down to around the 0.72 level, 0.728, 0.729. I would like to see more downside, more selling pressure for this. Again, I could be wrong. Right, if price breaks back above the 0.75 level, then we're probably going to see more upside. But overall, I see more downside for this. I see more downside personally. I see more downside. It's just a matter of waiting for the right opportunity. Right? If we go ahead and come all the way back up to 0.744, that's where I will be looking to actually short this thing for more downside. I'm not saying looking for it right now. I would want to short from up here. Okay. Let's see. I use macro account for indices. Yeah, there we go. That's the best way to do it. The risk on and off was a jewel, Abel. Now I definitely understand what's going on. 100%. I'm telling you. Yo, that graphic that I gave you guys, like that risk on, risk off graphic, man, that's the sauce maker right there. I promise you. Let's see. NAS 100 if you can, if you already did it. My bad. I got you, Dennis. Again, I am... it's very hard to say with this. Obviously, I'm still going to be expecting a lot more bearishness, but there is a chance for price to come up to this level right here of structure because we are right now breaking above this key level. So I would like to see, guys, price come up to here, 12,000, and then eventually go ahead and roll over to the downside. One thing that we also can keep an eye on as well is depending on how this actually plays, the price action around this key level, okay, could be really telling of what we can expect next, because yeah, right now we're actually breaking above this key level, but if by the morning time, by New York session, we're actually trading back below this level right here, then I will be expecting more downside at that point. Okay, because yeah, we're breaking above it right now, but that doesn't mean ultimately that we could hold it, right? Yeah, we could see more continuations higher, but again, I'm bearish these indices, so I'm always, my thought process is we're risk off, so I want to see more downside. So every time we are seeing a correction in the market, I'm just looking for another opportunity to get involved for a shorting opportunity. So yeah, we can see price potentially come all the way up to here, but if it doesn't reach up to there and we end up coming back below this key level, then I'm going to be looking for shorts all day. So that's what I'm going to be looking at in terms of NAS 100 going into Yeah. Let's see. GJ's moving. Yeah, we're starting to see more selling pressure. So I gave you guys an outlook for GJ as well, right? I wanted to see GJ actually come down lower to around the 164 level. I told you guys this yesterday as well. Overall, long-term perspective, I wanted to see this thing come down here before we actually go ahead and possibly see a rebound for GJ. All right, so that's just my outlook for GJ. I want to see more down pressure for sure. I think we're going to really see price eventually reach that 164 level, 163. Let's see, Euro AUD. Yep, I got you. Let's see what we got here for Euro AUD. I mean, Euro AUD, guys, is at a very, we got to go to the weekly perspective to see where we're really at. I mean, we're at a weekly level of structure right here, where price could potentially give us a push lower, at least for now. But looking at where we're at and looking at what we could potentially do for Euro AUD, we are at a very interesting level from both perspectives. What I think can actually happen, right, and I could be wrong, right, I could be wrong, but I want to see price actually go ahead and give us more downside, at least for right now, for Euro AUD. Right, I think we're eventually going to come and really break this low right here, this range that we have created. And I think that there is a chance for price to ultimately get down to, I would say, this level right here. Right, I would love to see price probably come right back to around the 1.51 level for Euro AUD. Right, so if I was going to be trading, again, I'm not going to be trading. I don't trade Euro AUD personally. I like to stick with a lot of my dollar correlated pairs. But yeah, you know, I think that we will eventually see price come down to around the 1.51 level. That's where I'm expecting overall. Right, I'm expecting more sell side. Now, where could we actually sell from? Well, we might actually see price probably give us a reaction from, I would say, maybe this level of structure. Right, so we could see maybe a seller really come into play around the 1.53 level. Right, so it'll look maybe something like this that I would be interested in, to then go ahead and target down to these lows. Right, this is what I would be looking for if I was going to trade maybe Euro AUD, which again, I'm not. You know, I like to stick with what I like. Right, so this is what I'll be looking for. Right, a sell from 1.53. Look to target around 1.51. So that's where I like for Euro AUD. Let's see, AUD yen, GER 40. I don't trade GER 40. But what I do know is that all these indices pretty much look very, very similar. Or like all of them, right? Like they all went from risk on to risk off type sentiment. So again, I still think we will eventually see a lot more downside for this. It's just there is a potential for price to give us a pullback before we see more downside. But overall, I am still expecting a lot more selling pressure, guys, for GER 30. Just like I'm expecting it for SPX, US 30, NAS 100, FTS 100, EU 50. All those indices, I'm expecting a lot more downside for overall. All right, shout out to Sunflower Moms. What's going on? I appreciate you for being our newest subscriber. Shout out to you. I appreciate you so much. All right, but friendly, that's pretty much going to be it for me tonight. Again, I'm just going to be very cautious. I'm going to be sitting on my hands a lot this week. I'm just more so interested in Euro USD if we can get a spike up into this level up here. But other than that, I'm definitely going to be cautious, be playing it day by day, be playing it through price action and how the market is reacting and responding. And then we'll pretty much go ahead and make a decision based off that. But I do appreciate you guys so much for tuning in, family. I love you guys. I will be back live again on Sunday with a weekly outlook, 12 p.m. Eastern, right? Noontime, 12 p.m. Eastern. Okay, so make sure to jump on. I will give you guys a lot of my outlooks to give you guys more perspective on what I think can actually happen. Shout out to Jeffrey Travers. What is going on? What is going on? What is going on? Shout out to you. I appreciate you so much. Thank you for being a part of the actual familia and being our newest sponsor to the channel. Please send me a message on Instagram so I can get you added into our private community, where it's actually more so we're able to talk back and forth and really just bounce off ideas off each other. So definitely make sure to go ahead and send me a message. Right, my Instagram is right below my beautiful face right here. Send me a message, Jeff, and I'll add you into our private community and our private Telegram chat so you could, you know, have access to me in a more direct perspective. So I appreciate you. I love you guys. Family, I love you guys. Thank you guys for rocking with me tonight. Thank you guys for everything. We're going to hit literally 50,000 subs very, very soon. 100,000 subs soon after that. because we're taking over YouTube, and we're going to do it because we're providing real, raw value that's going to help everybody grow. Love you guys. I appreciate y'all, and I'll see you guys all on Sunday with our weekly outlook. All right, family. Love you guys. Appreciate y'all. Have a good one.